folks, I'm L.A. Little and this is your daily TA Wrap. We take a look at these markets and we do it from a neoclassical perspective. Each night asking ourselves what happened today, what were our expectations of what would happen today, and what does that tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the gorgeous Rocky Mountains. I also do a show on Sunday. It's a weekly show. I try to look at a broader perspective. Of course, I do updates every day for members, as well as a weekend video for the members previewing the upcoming week, portfolio, things of that nature. So there's a lot of material that members get that you don't. Also, members, of course, get unlimited access to the tools. Trading signals, the stock monitor, there's a lot of tools here to take advantage of. So if you're not a member, you want to check it out, just pop over here to the site, click on free trial, and you can see what's there and how it might benefit you. As far as what happened today, well, yesterday we had one index giving us some signals, and that was the S&P, and it was suggesting that it wanted to try to go higher, but as we know, it didn't. And you always take notice when something doesn't do what you expect. And part of what, and I don't try to look for excuses, but part of what was happening today, to a great extent in my opinion, was the exogenous news coming out of Iraq in particular, but also in the Ukraine, where supposedly there's some tanks floating around on the eastern Ukraine now that are Russian tanks. But the big news, of course, being Iraq and being in the oil market. I took these quotes late, so they're actually reflecting after hours on the commodities. Oil was up $2 today. It's up another 90 cents after hours. Gold was up about 12. Silver was up. Dollar actually was down 0.25%. And as we can see on the indexes, we were down 109 on the Dow, 13, almost 14 on the S&Ps, bringing it back to 1930. 34 on the NDX and the NASDAQ composite, and the Russell actually was down the least, 7 points, 1159.5. So when we look at the indexes themselves, and we pop over to the GSPC, which is the S&P 500, we actually did come down with a little bit more volume than we did yesterday. Remember, yesterday we tested into the June 5th high. That low yesterday popped into that area, right, and bounced back out of it, which gave us some indication that it might hold, but that's not what happened. We opened up right around the closing price yesterday, and we just proceeded to trade down most of the day. So now what does that do? That brings us into 2 more bars at this point, and in particular, we're now faced with this bar and this one. These are the 2 of interest now. And if you look at that intersection of those 2 bars, you've got this one and this one over here, and you got a little small support zone. And as you can see, it came into that area, and we're not talking big numbers here. And I actually see a question about support zones and how they're calculated. The TA Today charts automatically calculate the best support zones, and best is a ranking system, and that ranking system is based on those items that make up support zones, namely swing point highs, high volume bars, wide price spread bars. When you take those 3 things into consideration, anything that has, for example, if something is a wide price spread bar like this bar, and if volume were extremely high like this bar, and they were combined, that would get a very high point total ranking system. And so that one would almost automatically become a significant bar and one that we would use in the calculations. One other calculation is how close are we to existing price. Naturally, we want to be as close as we can, otherwise the support zones don't offer a lot. But as you can see here on the S&P, the only support zone, the closest one that the today charts are showing us, is actually back on the retest regenerate zone. Actually is where this is, and it's back in here. Now why is it there versus nothing here? Well, because these rank higher, right? You got a very high ranking one right here at the bottom, another one above it, and then this one. What does that tell you? Well, that tells you that there's not as much significant support at these higher levels. Now if you're day trading, you have to go inside and find your own support zones, because we don't do intraday charts right now. At some point we will. But you know, what does that tell you as a trader? Well, it tells you there really is risk. What do support zones tell you? That's where you should expect buyers to step in. Well, if your price is up here at 1954 and your first significant support zone is at 1904, that tells you got 50 points of risk before you ever hit an area where there's reasonable confidence that there's significant buyers expected to show up. And so that is how these charts work and how they construct themselves. And if there were resistance zones, they would show up exactly the same way. And I suspect when you look at this tomorrow, it's going to try to draw one right here. There's probably going to be one right there tomorrow on the resistance side. So anyway, the point here, we come back into an area, a small area of support. Didn't come back with much more volume. Volume is about the same, a little bit lighter. I would think this thing tries to get a little bounce out of here. And then the question will be is, what does the bounce do? Right? Because it's always the same scenario, right? You already have ABCD structures now potentially to the upside. There's one here with a pullback to wherever it goes, and then potentially another push back up. And now you have the scenario where there's an A point here, a potential B point down here somewhere, some sort of a bounce, and let's say it can't get over that resistance zone that's probably going to draw, then you get an ABCD down. What does that do? That brings you back into this area of more significant support. So the question will be, how does this thing bounce? And in particular now, does it get back over this area that's probably going to draw as a resistance zone tomorrow? And that's the reads, right? That gives you information to work with in terms of what to do with the market. So tomorrow, this one at least looks like it's going to be a bounce. Looked like it would be today, but it didn't do it. And the exogenous events are overriding anything on a slow news flow. We actually did have some retail sales numbers that were worse today. That was about it for the news flow other than external events. But even there, they revised up the prior months, so it really wasn't that bad. It missed it by 0.4%, but they revised up 0.4% on the earlier months. So S&Ps, that's what it looks like. And sorry for digressing so much, but I think it's sometimes important that I do some digression to make it clear how some of these tools work for you and what they mean. If we look elsewhere, look at the NASDAQ, you're going to see some different scenarios here that are actually going to give us more clues. For example, the NASDAQ down, coming back with this amount of volume. This is the breakout bar. You can see it here. It was suspect. It had that amount of volume. The volume is almost the same. What is it doing? It's coming back in to do a retest, regenerate. How many bars? Well, in this case, only 5 bars. So it comes back into it today. Retesting is going to try to regenerate higher. So what do? The first thing you do is you look over and you say, okay, what kind of volume do you have there? 2.1 billion, and it was coming into this bar, which has got about 1.9 on it, and then it comes in with 1.9. So what does that tell you? That tells you the sellers, they're not significant yet, and that also suggests that this little retest regen is going to try to hold and get some sort of a regenerate back to the upside. We already know we got ABCD structures on the upside. We also know that we have trend to the upside, right? We're bullish trends across all time frames. So we'll see tomorrow. This will be a good thing to watch. Does it break below the low of the prior swing point high, because if it does, then that certainly starts to change your the way you look at this market from a bullish perspective to more of a sideways range type perspective, and that changes the way you want to trade it. But so far, this just looks like a pullback, right? And it needed to pull back. I mean, we've gone up 3 weeks straight almost. NDX, really no clues here. Yeah, it comes back, but it's so far up it doesn't really tell you anything. There's nothing to test against. The Russell did test. It also tested into a retest regenerate zone. And so if you look at it, that prior swing point high is here. Comes into it today, volume lighter, slightly lighter, and it's also coming into this bar, which is the ECB bar. And so when you look at all of those together, this actually did a retest and looks like it's going to try to regenerate higher. So you're doing 32 into, you're doing about 30 into 32 and into 31. So lighter volume on the retest regen and slightly bounces out of it. So again, that just simply looks like a retrace and wants to probably try to trade higher. Let's go over and look at, I'm going to flip to the aux markets next. And the reason for that is, when I see a day like this and I see wide price spread type declines, the first thing I always try to ask myself is, okay, are we seeing fear or not? And the way you measure that is you go look at some of these other indices and some of these other sectors. For example, you go look at bonds. What did bonds do? Well, bonds got a pretty good push today and some decent volume. Now, bonds are coming back into, if you remember, when bonds came down, this area became fairly significant. So as we go back up, I would expect tomorrow it's going to try to draw a retest, not a retest, but a resistance zone there. You're coming back up with less volume. I think that's going to be a tough spot to get back over. If it gets over it, that tells you something, right? It tells you that there is more of a rush to safety. So tonight, yeah, we'll push to safety, but nothing huge. If I look at the gold market, which is also a safety haven, what did gold do? Well, gold got a nice push up. You got some volume expansion. But what is gold doing? It's coming into a retest regen zone itself after more than 6 bars. Bottom of that zone, 122.84. We got up to 122.75. I wouldn't be surprised to see it pop in there tomorrow. You've also got this huge breakdown bar. It's 10.8 million shares. I would expect it to try to pop into there tomorrow and more than likely fail and do some sort of a retrace. Now, the one that looks different, and so yeah, there's a little bit of safety move here too. The one that's different is silver. Now, silver has already done the retest regen off the lowest low and came back and did it off the next low as well. So silver definitely telling us that it is wanting to work higher, and that the trade here on this particular precious metal is more of a range trade because it failed to regenerate lower. So you got a range trade here, you got gold coming back up. That kind of tells me that gold, yeah, will probably pull back, but it's not going to pull back that far and try to come back up again. If I look at silver on a longer term time frame, because I don't talk about them all that much, but you've got multiple time frames at work. When this broke, it broke this low. What is it going to do? It's going to retest and attempt to regenerate lower. Where would that retest go? Well, because it's real quick, it can happen immediately, it's going to try to make it back to the top of the bar. And that is what it's doing. And the top of that on silver is 1948. We're trading at 1876, so you can see another 70 cents or so potentially on the push up. And that would take it, let me get that number again, 1959. That would take it back up into, this high, I guess, probably. So yeah, about up there. So silver's going to have multiple swing points. It's going to try to break on the upside. And I think it's going to probably have some difficulty right in here about 1914. So Push up, yeah. Is it going a long way? Well, I don't know that it's going a long way, but it is a range trade now. But silver, silver and gold, gold and bonds telling there was a slight move to safety today. The other thing that I usually look at is the dollar. Did people rush into the dollar or not? Well, no, they didn't at all. And matter of fact, we saw a fairly big volume with no price gain. So we certainly weren't seeing a rush into the dollar as part of it. What we did see a rush in today was the oil sector, in particular the oil stocks and the oil market specifically. This has put on a huge move, breakout move overnight, and this was a lot of reason for the pressure in the markets today. If we look on a little bit longer time frame, you got an ABCD structure up again here, and this one's been walking high. Let me get that up there. So it's been walking higher on nested ABCD structures. For example, it had one here, completed, right? Now it's got another one here, and that one's going to try to get it up to almost the same area. So oil looks as if it's going to go test those highs and try to break them, and that looks to be like it could come very soon. If it breaks out, that's not going to be good for the market. Fast moves, whether they're in currencies or they're in commodities, especially a commodity like oil that has a huge impact on the economy, fast moves in these sectors are not good things for the market. Fast move down, fast move up, either way, currency same way. Something that's effective to widespread of the economy or the psychology, if they start making fast moves, it's not a good thing. Although this does look like it's going to play out towards the top on an ABCD structure. So all big move up. And then we can go back to the sectors now. On the sectors themselves, I saw a number of these coming in to do some retest regen. So let's look at a couple of these right quick and look at how they're coming back. So let's pop in. So the first one, XLB, this finished off an ABCD structure to the upside. Now it's coming back in for a retest regen. That high is 48.67. It's got about 4.5, almost 5 million on it. You're coming back with 3.3 so far. We'll see how it comes in there, but when it gets in there, that would be the retest and potentially the regenerate higher. Another one that's kind of coming back in now is the XLI. These guys got hit pretty good today off of the worries of overseas and the economy, the oil sector and the economy. 5407. So it's doing 10 million on the way back against 8. So this was coming off pretty good. The breakout bar has nothing on it. So that's that one, and that's more than 6. Well, actually it tested. No, it's already tested that. So it's going to actually come back in there and just test these. Looks to me like it's going to test these support zones. So that one actually isn't a retest, regenerate. That's just coming back into anchored support. The other one, there was two others that are actually doing the retest. XLV and where was the other one? Oh, I don't see it yet. I can't find it. Oh, XLY. Yeah, the XLY is an interesting one. So you had the retail sales today. XLY comes in, does 4.5. The bar it's coming back into is over here. It's got 5.3 on it. So you're coming in with lighter volume. You came back within 6 bars. You're testing a full retest regen. That won't be another one I'd look at for tomorrow. So there's about 4 things you can look at to see how they trade tomorrow to give you an indication of whether this market's going to trade lower, and instead of getting an ABCD nested inside and wanting to go higher, potentially turning this whole breakout move into more of a sideways range type trade instead of a push higher type trade. And that's important to know if in fact that's what it does. So if I look overseas, I don't see anything there that looks concerning. We'll see tomorrow, in particular, we'll see it with the European stocks, especially given the news today with the Ukraine. So here we've got the DAX. DAX is kind of hanging there a little bit. It came under back over last night, really hanging at the highs. If I look at the FTSE, it's in that range still. And that's even with some discussion of higher rates coming. So that one's still trading in that range, going sideways, consolidating. And then the last one, of course, is the CAC. The CAC came back, volume a little lighter here, under, back over. These all look like they're hanging pretty well. So if I look at Europe, it doesn't look so bad. If I look at our markets, you got some retest regions that are going to give us some clues. You got a couple things in particular. The S&P 500 and the Russell, both suggesting some sort of a pushback up again, and the rest of the stuff's pretty mixed. Just some places to look for things for tomorrow. All right, let's see what kind of questions we have. So I had a question pushed in. Let me see, what was it? A text question. Oh, it had to do with the Russell. So the question here was on the Russell was, are we putting in an ABCD structure? Not an ABCD structure. Are we putting in a head and shoulders top? And so, there's a lot of, like anything, there's a lot of people that have different ideas about what head and shoulders are. If you look at the classical literature, and to me, the primary one you look at is it's Edwards and McGee. I can't think of the name of it. Stock analysis of stock and commodity markets or something. Anyway, Edwards and McGee. It's kind of the Bible of technical trading. Came out in the 30s or 40s, and it says in particular, the way you get a head and shoulders is your left shoulder, which is this area, comes in on heavier volume. Then your head comes in on lighter volume, and this is slightly lighter volume. And then your right shoulder comes in on even lighter volume, and so far that is what's happening. So from that perspective, on a weekly basis, this could be argued that the Russell is forming a head and shoulders top. The same question or the same thought could apply to the NASDAQ, because it has the same sort of structure, except for it has pushed much higher now, and has, if this is a head and shoulders, it's a distorted one. This one's more like a double top. Now in Edwards and McGee, double tops tend to come 3 to 4 months later. That's what this one's doing. So one could argue that this potentially is a double top that's forming. 43.71 was the high. We got up to 43.46. So maybe it's a double top. Maybe we have a head and shoulders. There's always maybes. There's always these possibilities. I think rather than worry about the weekly at this point in time, what would be more interesting to worry about is what happens on some of these shorter term indicators that give us an idea of whether this is just going to be a range trade, right? Some sort of a range trade maybe like that, or is this thing going to break out as well? How would it break out? Well, the way it would break out is it finishes off its ABCD structure to the upside. And how might it do that? Well, it gets a nested one and pushes up off of that, right? That's how you can get that kind of power move that you need to move these things higher. So I would look at the short-term stuff. Yeah, keep the longer-term stuff in your mind that it may be. If you really want some longer-term stuff that says these markets should pull back, then take a look at your trading cubes, where, and I've got the CACs up, but if I go back, let me pull up the general markets again, and I can use the NASDAQ, I can use almost any of these. If you look at that trading cube on these time frames, this is so overdone. right? We've talked about this before. And so it's not like we're early cycle, folks. We are late cycle. The question is this thing going to extend up into the 50, 60, 70% range again, which it has been doing each and every time. If it does, right, then it gets extremely dangerous when it gets up there. Right now, one could argue, hey, on a short-term basis, this thing still has room to run, but we know on the longer-term basis, this market has been up and up and up for God knows how long, right? Because if I pull the monthly chart up and show you the monthly, let me grab it here, right? One can't argue that there's been a correction here. I mean, this thing hasn't corrected in I don't know how long. The best correction it's done so far is to simply go sideways for a little while. And even now it's pressing back to the highs. So, you know, when I look at the monthly chart and I look back at that time frame, mean time to failure analysis, yeah, this thing needs a break. It's needed a break for a long time. Every time it looks like it's going to give us one, it somehow saves itself. And whether you want to draw these kinds of lines for yourself, whatever you want to do, right, it's all the same. Market's been going up. Yeah, it looks a little tired up here, but it's looked tired before and hasn't pulled back significantly. Well, actually, these were fairly significant. We'll see if we get one of these pullbacks. We're due. It's just where's it going to come in? And the best thing to do, in my opinion, is to keep focused on the short-term stuff with the notion that the long-term stuff could succumb to selling pressure and we finally get those corrections. All right, so let's see, what are the other questions over here? The LVT question, which I was referring to earlier on the zones. Now, I don't think this actually had, so Federico says, why did this support zone change? I don't believe you actually had a support zone in here yesterday. I think you got a new resistance zone today, but I don't remember it having one. I think I talked about there being support here, and there still is support here, right, at this area. And again, it's not significant enough for the TA to day charts to signify that as the primary support. In other words, the TA today charts are going to look at the three. They're going to look at three. Now, at some point, we'll let you look at more. We haven't done that yet. But now that we have the personal preferences, right, we can add personal preferences in here if we go over here. And I'm not logged in, I guess. Am I logged in? Yes. Where is my, oh, there it is. Once we start opening this up, for example, we'll be able to open this up and say, okay, how many, when I'm looking at charts, how many support zones do I want to see? How many, all those kinds of things. We'll be able to set those defaults here. If you want to look at 5 open, you can look at 5. The reason we have it at 3 is because once this chart gets so many things on it, it becomes hard to use, right? I mean, too much information is actually worse than or is just as bad as no information or too little information. You want some happy medium. And, from my perspective, 3 is plenty, and that's why we have 3. But that's why it doesn't show up that way. Okay, I think that's it for tonight. So tomorrow, it's going to be a critical day. I mean, it's Friday. You got a long weekend. It's going to be hard to get a push back up tomorrow, given the long weekend and what's going on geopolitically. So tomorrow will be a big day. Can we retest and regenerate higher? Do we simply hold on to what we have now and maybe Monday we do that? Or do we actually break down farther? And if we start to break down farther, then these uptrends, all of a sudden, instead of looking like more up, are going to start looking like more sideways. Okay, folks, have a great night. Thanks for joining me. Take care. Until next time, I'm LA. This is, and it was, your daily TA wrap. Have a great night. Take care, and I'll see you next time. Good night, folks.